We're growing 150% year on year. Yes, it's cool, but I was not aware like how good this was at that time. And then you just realize talking to the investors and seeing what they say and how they don't understand, like how is this possible? Even, more than 90% of our customers are doing down payments. Our CAC recovery is less than 1 year. So it looks very good, right? Also from the cash flow business. It helped a lot. And then when you started to bring in the later stage guys, there's a difference between them.
Hello and welcome to Let's Talk About Tech, your podcast on venture capital and private equity by Venionaire Capital, the entrepreneurial partners. Today with me is Sander van der Rijdt, the founder of PlanRadar, famous Soonicorn, maybe soon a unicorn here from Austria. Welcome, Sander.
Yeah, thanks for having me. And you pronounced my name perfectly, like you are Dutch. So again, thanks a lot for having me and happy to speak today.
Thank you. I was practicing a little bit, as you know, right? We just did that before the show. Tell us a little bit about your background story. How did you become an entrepreneur?
Yeah, sure. So in my case, actually, it happened like during university already. So I was like playing around with some mates already trying to build the first startup. And then back in the days also after, graduating, I did together with one of my co-founders right now, Ibrahim, you know him as well. We founded our first, let's call it real company back in the days. And, it somehow happened at the end of the day because actually it was an idea in Ibrahim's master thesis to build like an online negotiation system. And it sounded cool. And I actually already signed up for a second master in Sydney. Everything was ready. I even had a flat and just like a few months until I should leave. And then, we applied with that idea on for funding, and we got by Inits, of course, Inits, we were in one of the first patches, and suddenly we had some money, and then we had to build it, and then of course we started selling before we built, and then we pivoted based on the feedback of the customers. OMV at that time was the first big customer for that procurement solution because we switched from online negotiation to e-procurement. And then suddenly we had revenue, and I, delayed the entire trip to Sydney and everything. And since that day, I'm working together with Ibrahim still. Now it's PlanRadar. Yeah.
What happened with the procurement solution?
Yeah, it was a procurement solution. We were doing like e-sourcing, e-tendering, e-auctioning, stuff like that. And actually, we had it up and running until 14, 15, I think. Around about 10 years. At that time, there was nothing like SaaS or business angels, or at least not in Austria, right? So we were building that product and telling everybody, this is like an on-demand solution. Like you can log in via Internet Explorer. And, when you talk to customers, they were just like, okay, it's cool. Where's the CD-ROM? How can I install it? No, you don't need to install it. It's in the internet. I mean, these times, right? And we had no money. So we founded another company in sales area. So we built up a sales agency with more than 80 people just doing selling, B2C, B2B, door-to-door, point of sales, on the phone, generating cash flow for ourselves. And of course, for the other company to fund the developers. And as said, we had it for 10 years, and then at a certain point in time, it didn't make sense anymore because we were not investing in the tech stack and everything. But right now, these were the first companies in total. PlanRadar was the 8th one. So we had in the past already 2 exits, smaller ones, let's say not on PlanRadar scale, 2 times. Successfully liquidated, I would say, so fuck ups, and 3 other companies are up and running.
Okay, and basically for PlanRadar, then the switch came because you shut down companies, you had an empty glass, and you were looking for something new, or was this an organic switch?
No, we were selling one company. And then we had this 2 years period where you have the carrot in front of you, the carrot. And during that time, we were already looking for something new, looking at different areas, different ideas, just finding the next thing where we want to put effort because, every time at the end of the day, I think you learn something, especially in the cases which didn't work out. We learned a lot. So we were building our pattern and looking for the next thing. And during that period, we got in touch with Domagoj, also one of our co-founders, actually the one who had the idea, because he's from the construction industry. He had like this industry background and knowledge. And he had the idea, and then we started to meet and said like, yeah, you need to build an MVP. So then Konstantin and Clemens came in, they built the first MVP. And then when they started to do the marketing or go to market, this was somehow when we ended this period, the selling period, second tranche. And it fit perfectly together, because we started to do the first, go to market campaigns. Actually, I mean, also to share with you guys, we just basically set up some SDRs, PDRs, like just cold calling people, because we had that background. We knew how it works. And so we just started to call companies cold in the German-speaking area, like architects, construction companies in Germany and whatever. And I mean, this is not the easiest thing, right? Cold in the construction industry, B2B. So there's stuff that is easier. And, we did that campaign, and then all the results came in, and I remember it exactly. We had like 69% positive feedback on the cold calls, which is very high. When you benchmark it should be around 10%. And we said like, how is this possible? I mean, it doesn't mean that 69% of the people are buying. It means 69% of the people are talking to you. They think it's interesting, and they have no other solution in place. So this is like, wow, there's really an opportunity window. And then we said like, look, guys, let's team up. We have like a perfect combination of like knowledge and domain know-how. And yeah, then we just started and, built the first like 250, 270 customers by ourselves. So like everybody was selling, like also the tech guys, it's in our blood. And then after that, we generated already revenue. Then suddenly companies from other countries started to sign up. Like let's say from Australia, from England, and it was like, okay, the challenge that we are solving, it's not only in the German-speaking area. So it's a big thing. You have this opportunity window, then you should be fast. So we decided, okay, let's bring in VC money at a relatively late stage, right? We had already like 500 to 600 K euro ARR, like recurring. It was good business, basically, the 5 of us, or 5.5. And then we decided to bring in VC money, did our seed round, and then started to grow.
This is an incredible story. You really deserve the label serial entrepreneur, right? If it's 8 companies, right, that you have built, and then basically had a dry run with a prototype, calling potential customers already before even starting the business, you effectively joined like co-founding business angels. You could say, right? Very seasoned.
Maybe, yes. Yeah. I mean, at that time you were just doing this because you had your pushbacks, like, okay, I can, and this is actually an mistake we did with the first product, because we built like an extraordinary tool, but we were not sure like is anybody paying €1 more for that feature or not, but we were just building it, right? And this is like one of the big mistakes, because I always say like you can easily overspend on product, but you can never overspend on marketing and sales. So this was a learning. Okay, let's try first to sell it. And I think a big part in that learning is also the fact that we moved with one of the other companies to Silicon Valley. We spent there like a few quarters. And there you see like they have a completely different approach to everything, like good enough and fast and sell, right? And this was a learning. I think we had it like in 11, something like this, 2011, and then say like, coming back and say like, okay, let's forget about our approach. We need to change stuff and be faster and more sales driven and things like that.
This sales driven approach I've recognized quite early, right?
Yes.
And I've always heard Ibrahim, your co-founder, telling me about KPIs, structures in the sales team, hire and fire mentality. I've heard from a person that has applied. You have a very, very intense process of hiring, especially top tier people. Is this all from the learnings that you had from the past and from Silicon Valley copied, the patterns that you mentioned?
I mean, I would yes and no. So of course, everything is like from learning, because I mean, you make mistakes, and there you will make mistakes for sure. We do mistakes every day because we now reach a stage where we maybe are not that experienced from the past already, but you make mistakes and then you learn from it. And for us, it was like, you brought the example of like hiring people. I can talk about like our how the assessment and how the process looks like when we hire salespeople. So nowadays we have like we do assessments, right? We just tell them, okay, if they pass the first round, they will have an assessment, and the task is like to sell PlanRadar. And nothing more. You get all the info on the website, just sell it. This is somehow this Wolf of Wall Street pen approach, right? Okay. That's the product, sell it. Up to you how you do it. And then we have like a questionnaire for the people sitting in the assessment. So there are 2 to 3 people who rate the applicant, and you have like 39 points where you can check or say it's missing. And they are like there is stuff like how is it well prepared? Is the person shy? Or also stuff like, is the person lying around? Because we ask question the person simply cannot know. And then is it a cowboy who just he or she says anything? I know this is like that. Or is it somebody who said like, I don't know, but I will come back to you tomorrow, which is not a shame. It's completely normal. It's much better than lying around, right? Because if you lie around, you lose the trust. Right. And I mean, just as an example, and then you can score the person. And nowadays we know, depending on the score from the assessment, if this will be like a junior, senior executive for us and how much revenue the person can bring potentially.
Wow, you even have a prediction on the revenue potential of a certain candidate.
Because it will be then linked to targets the level, and we know like, okay, you can be a senior with us based on your skill set or not, or need to develop. And basically this you need to build, because we had so thousands of interviews, right?
Yeah, I can imagine. How many people are you today?
We are around 450 people today, or let's say we have been already around 500, and we decreased a little bit, like especially in different sites, because construction and real estate industry nowadays they have a tough time. I'm pretty sure you are aware, right? So at the moment we are like growing not as fast as we used to, and that means like a little bit less people. So I mean, in the past we had quarters where we hire 100 people in one quarter, like new hires and replacements.
And in which markets are you active?
So we have customers from more than 70 countries at the moment, and we have like 16 sites, like 16 offices all over the world. So it's like Europe and North America, and then MENA APAC as well.
Wow. And which market is the strongest? Still Europe?
Europe, yeah. Europe is still the biggest. So we started in 22, like to go global. I would say like from 20 on, this was the time where we did our Series A with Insight Partners. And Series A was like about owning Europe. So we started to set up different sites all over Europe, all major cities, and bring like PlanRadar to the other countries. And I mean, this could be also a question, like it's a software solution, right? It's software as a service online. So basically we don't need like sites and entities all over the world. But when you look at construction real estate, it's a very old-fashioned industry. So we need to be on the ground, speak the same language, be in the network. Customers receive the invoice in their own taxation system offer, so it's easier for them. So we invest this into our go-to-market motion.
Wow. And all these sites you manage centrally, or are they kind of independent?
No, I mean, they are mainly sales offices. So a lot of other functions, they are centralized, and then we have like regional headquarters, like where, because just in terms of time zone, it will be also difficult to have like, let's say, entire marketing only in Vienna. No, we have like another regional headquarter in the Emirates as an example, covering MENA APAC.
Right. Now, we just had a podcast on crisis in leadership, leadership in crisis. Sorry.
Yeah.
So leadership in crisis.
So you mean
we have learned a term called the poly crisis, right? So
poly crisis.
Yeah. So the set of multiple crises, one after the other. Now, the real estate market is quite volatile, right? And Europe right now is obviously in a crisis. We can read every day in the newspapers.
Yes.
how did you prepare as a company for such an incident, right? Real estate was rather stable, especially
Yes.
in Western Europe. And then suddenly a crisis hits,
Yeah.
right? And this must have an impact. It
Yeah,
shifts
sure.
you in the company.
I mean, you say like poly crisis, so there have been like different things. Let's take Corona or COVID. I mean, in the beginning, everybody thought it's a crisis. Like for software, actually, it was somehow a boost. So we had like no real impact on our new business or our business, the way how we work. Right now, we really have an impact because, like, based on the real estate or financial crisis, which actually created most of these problems, because you had like rising interest rates, and at the same time the construction costs were also going up, and the whole ecosystem in construction is not working anymore, because I mean, on one hand they were always like on the edge with the calculations, very aggressive, because for more than 10 years everything was going only north. And then suddenly, calculations were missing. Like people who had too much debt, debt is getting too expensive. You cannot serve it, and then you go bankrupt. And you see it. You saw it in the last 2 years. You see it this year as well. So this crisis, that one hit us, because we were coming like from an area. I mean, in the past when we were smaller, we were growing like 3-digit, let's say 100% plus. Then we were bigger as a company, so our growth was always like around, let's say, 60 to 80% year-on-year revenue growth. Nowadays, last year we still grow 40%, or no, 23. We grew 40%. 24, it was like between 20 to 25%. So it's less. I mean, if you talk to other people on the market and you tell them, we're growing slow, only 25% year on year,
while everybody is tanking,
while everybody is flat or shrinking, then they give me strange looks. But for us, it's like slower.
Right.
Yeah. So we are in this phase right now. So also for this year, we're looking at like 20-25% growth year on year. On the other hand, if you're not growing that fast, it means you're not burning money, right? Or you should not burn money. Let's put it that way.
You shared with me that you're profitable,
yes.
And
cash flow. This is cash flow positive. Let's put it that way.
Cash flow positive. Yeah. So for a scale up, right? That's very untypical. In the old days, people would have asked, "Do you have a problem growing? Right? Is your market already saturated?" In your case, with this poly crisis, right? This means stability. But how could you maintain that? How did you prepare for the crisis? To come back to that question, because or did you adjust just on the fly when it hit? I'm curious from the management perspective, from the leader's perspective. Yeah.
Two things. Of course, strategy-wise, for us, it was always important to diversify. So we started just in construction, defect management or snagging. Then we had more use cases in the construction phase. And then we realized that our product can be used in the entire building life cycle. So we went into planning, we went into operations, maintenance. And when you are in a crisis like we are right now, and there are no new construction projects, all the existing buildings, they will still be there and still need to be maintained. So for us, this diversification, it helps us, because like we are more in this operation phase with our customers. The other kind of strategically preparement was like geographical expansion, because you have other life cycles, let's say in UAE and GCC or in the US compared to Europe. And this helps as well. And one very important thing from my point of view, and this is not too much related to strategy, but this is more related to DNA, because we bootstrapped in the past. PlanRadar is the 8th one, and it's just like the one that was really scaling fast, and where everything was about top line growth. So you spend a lot of money, but at the same time, you have it in your DNA that you can be very cost efficient. And this is something that helped us, because I remember in the old days, having the board meetings, and then every month, also in the past, every month we are cash flow positive, I got complaints like, we're leaving growth on the table. We're only growing 8 to 10% month on month. Why not 12 to 14? Stuff like that. And you sit there like, I mean, what kind of problems are there? And nowadays, like every time you're cash positive, you get like applause, right? So this is like how the market changed. But when you're not used to work in a bootstrapping and cost efficient environment, it's very hard like to scale back from money doesn't matter to like, okay, I need to do like now real business, right? And for us, this was never a problem. Like we even overachieved, like although we're growing like less than we planned, we overachieved in profitability because we have our cost under control.
How strong was the guidance of investors? Was there a change from the early seed funds to the more growth funds? Did they adapt like you did as fast? Were they forward looking, or did they learn from you? How were the dynamics?
It really depends on the different investors and the different type. So when I think about the different phases, so or let's put it that way, when we brought in money, we were already somehow later seeds. So we were, and we haven't been like newbies, right? We did already some other stuff. So then you have like a little bit of experience at least. And then the interaction is differently. And when we brought in our seed investors, there has been discussion. They were always pushing us also in terms of being like more aggressive, more top line, which was good at that time, I believe. I still believe it was good then, because the truth is always in the middle. So maybe we are not spending too much. They push us to spend a little bit more growth. Okay, leads to another round. So yes, it was good. So in the very beginning, I think, we had like good input on like this VC game, like which KPIs you need to reach to have a successfully other round, let's put it that way. Also thinking about us personally, when we brought in that money and then we were growing, and then we were thinking about Series A and just starting to talk to the people. And me personally, we're growing 150% year on year. Yes, it's cool, but I was not aware like how good this was at that time. And then you just realize, talking to the investors and seeing what they say and how they don't understand, like, how is this possible? And even, more than 90% of our customers are doing down payments. And then our CAC recovery is less than 1 year. So it looks very good, right? Also from a cash flow business. So they helped a lot. And then when you started to bring in the later stage guys, there's a difference between them. Okay, it's much more this numbers game, of course, much more KPI driven. And it also depends, I think, on the geo. Like, let's say the Europeans, they are different to the Americans. Also, they have when Insight came in for our Series A, I remember they were hunting us, or for the Series A, we created a nice FOMO, preparing everybody, having everybody ready. And then finally, send out the materials. And I remember I sent out on Monday. Then on the Tuesday, I got the first call. They said it looks interesting. On Wednesday, I got the next call by luck, we are on Friday in Vienna. Do you have time? So they flew over with 3 people from New York. By instance, they will be here on Friday. We said yes, no problem. And they came in on Friday. We're doing the entire day, a deep dive together. Went drinking in the evening. I'm pretty sure everybody had a big headache the next day. And on Monday, I got another call to say, we want to do it. What should we write in the term sheet to be sure that we can get it? And 1 week. And this is really fast.
Okay, so that's the playbook when you do it right. When they ask you what they should write into the term sheet, I've never heard such a story.
Yeah, but no, it happened. It's depending again on because with the later stage guy, he or she, or if they come in the round, for them, this is just the beginning. So it doesn't matter, somehow the valuation of this first ticket doesn't matter, because their game continues or starts later on. So for them, it's if they want to get in, they get in.
And did you then feel a strategy shift or a certain push that came with this investor? Insight Partners is one of the most reputable VC funds in the world, right?
Yes, of course. We saw much more support because they have a big platform like Insight Onsite. They are in total 500 people inside partners, right? They have the investment team, I think around 100 people, and the others are like platform. So they have different kind of people. And for us, it wasn't always like, we have this question around pricing. No problem. Our VP pricing, James, he did more than 200 SaaS pricings already. So talk to him. And then, of course, I mean, how many times do you change the pricing as a founder? Like maybe 1, 2, 3 times, but there's somebody who did it 200 times already. So, of course, this is very valuable input. Or you have any questions around geos or whatever. So they can give you a lot of input, but it's always like you need to ask for the input. I think it's the same with all investors. They always tell you like, we bring so much to the table, but you should be aware that you are the one who should do the work. And if you need something, you need to really push. And I mean, having the Americans then on the cap table, of course, like one of the discussion points was going to the US. So they said like, let's go to the US. When we go there, of course, when you're successful in the US, you have higher multiples, clear. And we pushed back on that. We said like, no, we don't want to go to the US right now. And it was then no problem for them because we said like, look, we think it's too early because first we want to own Europe and then we are big, we are stable, then we can go to the US. If we fuck up, then no problem. If we fuck up now, could be a big problem. So let's wait. First be stable in our core markets.
You also went to the Middle East.
Yes.
Was that already when you owned Europe, as you said?
Yes.
Okay.
Yes. This was like, we started like to expand in entire Europe around 20 or 1920, we started to expand. And then we did our Series B end of 21, 22. This was with the target like to go global. So we initially planned to set up in Mexico, Brazil, and US, and on the other hand in like the Emirates, Southeast Asia, so Singapore, Malaysia, and Australia. And we did it. I mean, then the crisis hit us, so we had initial. 22 had also like fully focused top line growth plans, which then drastically changed in the course of 22. So we switched to this efficient growth mode, let's say 60 to 80%. And then, here we are now. But like we did all of that, but with less spending. Let's say when you start a new country, you don't put 10 people, you put like 3 people.
How do you face competition? I mean, PlanRadar obviously found a solution that is deeply needed. You found this window of opportunity very early, right? But now prop tech is rising, right? Especially in the Middle East. I see so many prop tech solutions, prop tech accelerators, specialized funds, etc. Is there more and more competition coming, or is this actually good for you in the industry?
I mean, there are like different viewpoints, of course, because when we started, it was like, digitization and construction very beginning. You just had the term prop tech. Nowadays, you even have like prop tech and contech. So you differentiate a little bit between real estate part of the business and construction part of the business. And, in the early days when we started, it was just like, wow, now you use like a mobile and a tablet instead of pen and paper. This is innovation, right? I click one button and I create a PDF. Like my report. I mean, it's magic. But nowadays, you have other stuff like head-mounted 360-degree camera. It's like our side view thing. So you of course, you had to develop the product, and at the same time, also market is developing. Like it's like slowly moving from these selling by education to like a more developed environment where the people already understand what digitization can do for them. But nevertheless, I mean, still 50% of our customers, they're coming from pen and paper, because like construction, real estate, it's like the biggest vertical in every single country in the world, everywhere. And we have nowadays like around 25,000 customers roughly. And I mean, just when you look at Western Europe, they are like, based on our analysis, there are more than 2.5 million companies who can be our customers. Not talking about the US or Asia or somebody else. So it's just like a drop in the bucket, right? At the very beginning. But of course, a lot of companies or startups, they saw that this vertical is interesting. It's not digitized yet. And you see like new startups everywhere. There have been also like competitors in the US too. Both of them are not independent anymore. They were sold already. And I mean, at the end of the day, for us, it's a growth game because the market is so big and we are just at the very beginning.
I hope one day you're listed on the stock exchange, and I can finally make up for my mistake to not have invested in the early days. Last but not least, I want to ask you one closing question. You're so deep in this field, right? And you see also a lot of things happening left and right. I know you're also a little bit active as a business angel on the side. There is this huge AI wave in the moment, right? There's this huge trade war thing that is going on. There's many other things that are popping up. How do you see your market developing, or general the tech market? So if you would say, what does Sander do in 10 years, right? Where would you be?
That's a very difficult question. Like in 10 years, 10 years in IT or in software is like 50 years in any other industry. But if you ask me, like I can talk for our industry or for our category, like, yes, AI, it's a big thing, but from my point of view, you will not sell or use like the selling point. This is AI. Yeah, the construction guys, they don't care. You sell like use case or solution based. So we, as an example, I mentioned the side view thing. So you can do like a sidewalk, having a head-mounted 360-degree camera, and then the AI we developed like automatically recognize where on the 2D plan are you based on the light and what the camera is recording, and then automatically put all the information on the right spot on the plan. So the people instead, of the other solutions where you walk 10 steps and then you wait for 10 minutes and then you walk the next 10 steps. Now our thing is you just walk and you have all the information recorded, and then it's put on the right place on the plan. And then if you look later on, as an example, you make this every week, and later on you want to know what is inside of the wall. So you can just use the time slider and look inside. So it's like a time machine. So this is a use case that I can sell, but the person themselves, they don't care if it's AI or not. So it's a little bit like this, password driven thing. PropTech was also used to be a password back in the days. But when you use like technology in the right way, you can really solve problems or bring solutions very fast. And that's what it is about. So we definitely work on that also, especially right now in the area of communication. You can do a lot of things better. User interface, how the users interact with the tools, so you can improve there and make it more convenient. But if it's AI or not, the user don't care, or they sometimes even don't recognize.
And for you, in 10 years, your vision?
I mean, like I think like a lot of these like recurring activities, let's say even stuff like building an app, it can become a commodity, right? Because it can be done easier. So then it's about like this polishing or fine tuning, the last 5 to 10%. I don't believe that like let's say AI will do even this last 5 to 10%. This is something where you always will need the specialists. But when you think about like setting up a company, it will be very easy. You can immediately do it because, right, it doesn't matter if it's like spaghetti code in the app or whatever. I don't know. It's just like out of the box, you have an idea, you make it work, and then you start to sell it. And nobody cares at the beginning if it's not built like perfectly or whatever. And then when you have traction and you get revenue, okay, you can improve it. But like these tryout things, MVP stuff, easy. I mean, this will be commodities.
Yeah, I will follow your path further. And I'm curious what you will do in the next 10 years.
Yeah, let's see.
This was a great episode. Thank you for joining us.
Thank you.
Thanks for tuning in. Don't forget to subscribe to our channel and tune in for the next episode.